This is a pre-market analysis of 19th of August. We have a lot of negatives actually, but GIFT Nifty as of now is indicating a flat opening. So Nifty may open flat, and expectation is that it is a sell-on rise market because global bond sell-off you can see, Nasdaq have crashed more than 1% you can see, and if you look at other areas also, the crude price is going up, and it is still at 91. Brent crude is at 91, and US-Iran tension is escalating. So considering all these, there is nothing positive, right? Except the ADRs. I don't know why the ADRs, IT ADR is showing some very good positivity. It's a total reversal of what we have seen in the Indian market. And banking ADR is also almost 0.5% up. And FIAs have bought last day, despite a day before yesterday, they sold it. Yesterday, they bought it. So there is more negative than positive, but still we are getting a flat opening means that's an opportunity to sell. It may go to 24,100 or even 24,000 level, right? But considering the scenarios that Indian markets are now taking some support at this level 150 and FIIs are buying, if there is any bounce to let's say 24,260 level, 24,250 level, that is going to be a good opportunity to sell. Okay, or near to 20 MAs, that's the best opportunity to sell because yesterday you got a negative candle towards the end of closing. If you ignore that and pre till 315 where it was trading, and if you get that level, that gap is filled, then you can try for a short trade. That's what I'm looking for. Okay, so what I'll do is I'll try to buy a put there or I'll try to sell a call there. That's exactly what my plan is. Ignoring the last candle where 315 it was closed before the auction, there the gap is filled. I'll look for a trade. So last day, if you look at again US-Iran tension, Trump have stated that there are currently no talks or conversation which is going with Iran. Nothing is scheduled, and the US naval blockade remain full in force. And according to him, water mines have been removed, or it has been exploded or detonated, and the Strait of Hormuz is open, and now it is clearly operating. Iran have two different signals. In fact, on the negative side, a senior Iranian official reportedly said that Iran is moving towards a full offensive military posture because negotiations have completely stalled. But there was also a potentially positive statement. An advisor to Iran's supreme leader said Iran remains open to dialogue with US, provided negotiations should not be treated as surrender. See, this basically create an important possibility for the market because if the US suddenly agree to restart the direct negotiation, then the market will react very positively, very quickly also. So far, US was ready to talk, but Iran was not. But now Iran is willing to talk. So if US also agree to that, then that can be a good positive. So let's see what is going to happen. Now, the bigger problem today is, you see, this is a major macro development, right? It is no longer limited to Iran. A significant sell-off in the long-duration U.S. government bonds. The U.S. 30-year Treasury yield that rose approximately 5.4%. That's the highest since 2007, right? And the U.S. 10-year Treasury yield that's almost 4.75. That's highest since Jan 2025. Okay, so most importantly, if you look at this bond market weakness have started spreading beyond US also, and the long-term yields in Germany, Japan also is moving higher. So this has become a global bond market issue rather than simply a US specific problem. So that impact will be visible in terms of liquidity, and that will be affecting the market also. Now, what happens? Why rising bond yield hurt the equity market? When the long-term government yield rise sharply, what happens is the pressure is usually, you know, greatest on high valuation growth stocks, and that was very clearly visible last night. If you look at AI-related stocks, were almost down by 2 to 9%, and that's putting significant pressure on the technology-heavy Nasdaq also, and Nasdaq has almost fallen 1.3%. S&P 0.7%, Dow also closed negative. So US markets is completely negative. But Nasdaq was significantly underperformed. Now, if you look at crude also, again, that is another. So first, Iran, US, that is an issue. Bond sell-off is an issue. Now, crude is also, Brent is around 95, WTI is around 85. Still, it is an uncomfortable level. When the tension is there, this will happen. Now, if there is any positive discussions which is coming with respect to the negotiation, then the crude will fall. Of course, it is good for the market also. But after all these, surprisingly, GIFT Nifty is now trading around 24,200 level. And if you give around 50 rupee premium, it is almost at yesterday's close itself where it will be opening. Most probably, it will be a flat opening. That is why I told you Ignore the last CAS candle and 315 where the market closed. If you get that gap fill, that price action will be proper. There you get a better opportunity to short. If you have good capital, slightly risk appetite also, you can go on the downside in the opening itself. If not, buying put option, selling call option is what my plan also. Okay, but again, it's a support level. If that level is broken, it have a potential to go till 24,000 and 24,000. Now this is one DTE to Sensex. That means roughly around, if you translate, it will be around 76,500 level. That's what I can see in Sensex as a support. So that's it. Again, if you look at ADR, IT stocks yesterday in India have fallen almost 2%. It was dragging. Banking also closed negative, but if you look at ADR, Infosys is up by 2%, Wipro almost flat, ICICI is almost 1%, HDFC almost flat. So IT ADRs are close to 2% positive arbitrage. Banking ADRs 0.5% positive arbitrage. So Indian ADRs are giving a very strong positive signal. Now, apart from that, if you look at yesterday, FII's net bought for 1650 crore, 1650 crore, DIIs for 2600 crores. So combined institutional buying is around 4250 crores. That's very index. See, despite institution buying this much, 4250 crore yesterday, market closed negative. It was, selling pressure was very clear yesterday. Throughout the day, market was on the downside, gap down and going down and going down. And last candle, cash market also, you know, it was on the downside. So what I thought is the cash market transaction might have been done by FIAs, right? They created that selling liquidity. They might have borrowed and created selling liquidity, but it looks like who? Maybe retailers. So again, if you look at the options, PCR, the put call ratio have fallen. Call open interest is 27. Put open interest is at 32 because at the support level. So PCR have fallen to 0.90. Again, participant wise, if you see the retailers, the clients are 26% net bullish, FIS 22% net bearish. Top traders are also looking bearish 3%. In index futures, clients, retailers 81% long, DIIs 72% long, FIIs heavily 90% short on futures. This is a point that I always tell. If I want to go short in cash market, first I short in futures and then go. That is why I'm concerned when I see FIIs having a heavy short selling position in the futures. Prop traders also surprisingly 57 percentage short in futures. So retailers or the clients plus DIIs on one side predominantly long, and FIIs and prop traders are predominantly short. So this 90% short position is something which is big. So that's the main area. Yesterday Nifty closed at around 150 level. So now 100 is an important level. Once that is broken, 24,000, it can move towards 24,000, and that will be a major support area. So if by any chance if you get a 24,000, there can be a sharp bounce, but till then, market is looking like sell on rise because global scenario is not good. Bond sell off is there. US markets have closed negative. Crude prices not falling. Considering all these, if you ignore FIAs yesterday, so what means today they can sell also. Okay, and despite FIAs and DIAs both yesterday, market have fallen. So considering all these negativity, I would say it is better to sell on rise, especially when you get that gap fill of yesterday's position 24,200. 24,200 could be a resistance at the open. 260 will be a much better level, but 200 also 200, 230, 260. These three levels are very important. Okay, so you plan this and option data also. If you see maximum call OI now is at 24,500 and after that 24,300 and then fresh call rating you can see at 24,200 because yesterday market closed at around 24,150. So that's why that's the new call rating. Put side maximum at 24,000 and then 24,200. That level is also there. So 24,200, that's a straddle people. So just keep these levels in mind and trade responsibly. So I see you after the market. Thank you. If you would like to join us for the live market mentoring program, where we teach based on our trades in the live market so that you'll get that live assistance, you can join us, talk to my team, join the session. I see you there. Thank you.